Stocks are soaring as oil drops 30 minutes until the start of trading. I'm Matt Miller.
I'm Dani Berger. Bloomberg Open Interest starts right now.
Coming up, global markets exhale as the U.S. and Iran agree to a ceasefire, but core issues, so many of them, remain unresolved.
Meanwhile, oil plunges below $100. Iranian state TV reports that the first ship has passed through the Strait of Hormuz with Iran's permission.
And Delta jumps while Exxon slides as corporate America recalibrates after the Iran war-driven oil shock.
Lots of things moving this morning. One of the big beneficiaries, Matt, in the stock market that I'm looking at pre-market are all of these travel stocks that have been beat up tremendously. We also heard from Delta Airlines. They were out with a cautious outlook this morning. They're expecting to take a $2 billion fuel hit due to the war, but the affluent are still spending, and maybe fuel prices are going to start coming down. So United, Carnival, all of them rallying this morning.
Yeah, these U.S. airlines don't hedge. We're going to talk to Sid Phillip about this in just a bit. We're also watching energy stocks falling, as you might expect, alongside the slump in oil on the ceasefire deal. Exxon saying 6% of its global first quarter production was knocked out because of the war in Iran. Its shares are down just about that much. Chevron off 5% and Occidental down almost 9%, Dani.
Let's get back to that. Our top story this morning, President Trump said that the U.S. is discussing sanctions relief for Iran, acknowledging a key ceasefire demand from Tehran after he threatened to destroy the country. Defense Secretary Pete Hegseth spoke in the last hour.
Operation Epic Fury was a historic and overwhelming victory on the battlefield. A capital V military victory. By any measure, Epic Fury decimated Iran's military and rendered it combat ineffective for years to come.
Joining us now is Becca Wasser, defense lead for Bloomberg Economics. She's led studies in war games for the U.S. Department of Defense. Becca, just how fragile is this ceasefire?
The ceasefire is incredibly fragile, and I think that that's for two main reasons. On the military side of things, we're already seeing potential attacks. We are seeing right now that Iran has continued to fire drones and missiles into the Gulf states, Saudi Arabia, Bahrain, UAE, and Kuwait. And that in itself might be a violation of the ceasefire. Additionally, Israel continues to conduct operations against Hezbollah in Lebanon, arguing that it has ceased attacks against Iran, but not against Iran's proxy group, Hezbollah. And if we're shifting to even the diplomatic things, the two sides are just so far apart on their various demands. Iran has provided very maximalist demands, including things like, the potential expulsion of all U.S. forces from the Middle East. For the U.S., the continued threat of Iran's highly enriched uranium or even its missile and drone program continue to be non-starters. And at the end of the day, Iran right now continues to control the Strait of Hormuz, which was a key war aim from the White House to have that fully open.
How strong, Becca, does the Iranian regime look now, still in place, possibly even more hardline than before? And how weak do we look from the perspective of our adversaries?
Well, you heard Secretary Hegseth saying that this was a complete victory for the U.S., a V for victory. I'm pretty sure that there's a very similar message circulating in Tehran and larger parts of Iran at this juncture in time. Essentially, the ceasefire is a temporary pause that allows both sides to claim victory and to claim that they have achieved some part of their mandate. The murkiness of it allows them to do that. But at the end of the day, both sides have taken hits. Iran has had its military capabilities degraded, but it still retains core components of its ability to defend itself and its ability to fire on, potential adversaries. And the U.S. has also taken some sizable hits in terms of its high munitions expenditure, some of its hits to forces. And at the end of the day, the greatest hit, frankly, has been to civilians in the Middle East, as there has been a high human cost of this conflict.
And Iran has also maintained their capability. It would seem to dictate the flow of traffic through the Strait of Hormuz. Becca, what do we know about whether this waterway will indeed be opened over the next 2 weeks?
So the wording of the Iranian agreement is very specific. It says that it's going to be open and that it's going to be at the discretion of Iranian authorities, in particular the Iranian military. So there are open questions about how many vessels are going to be able to get through, what is the method and means of which they're going to be able to get through, how much is Iran going to charge, and what path are they going to take, because Iran still potentially could have earlier mine to the strait, and that is going to dictate how much traffic is going to be able to get through and which pathways they'll be able to take out of the strait.
Becca, how much has this excursion, as President Trump likes to call it, cost us? Pete Hegseth earlier said we only used 10% of our military force to decimate Iran. But we had a story last weekend showing that we're running out of those long-range air-to-surface missiles.
So there is a longer-term readiness cost for the U.S. military. That is some of the wear and tear that we have seen on U.S. forces and capabilities, including an extended deployment of the Forward Carrier Strike Group. Additionally, you have seen this very high expenditure of really critical missiles and munitions that the U.S. might need in potential future conflicts. And there's going to be a gap as the United States tries to rebuild those missiles, which will take, up to years to replenish those stockpiles. And that in itself is going to come at a high cost. And that is why we have a very high budget request for the Department of Defense this year.
All right, Becca, thanks very much. Becca Wasser there of Bloomberg Economics walking us through some of the key questions here. Let's get to the market reaction. JPMorgan's equity sales desk says stock markets have probably found a floor as the latest ceasefire suggests uncertainties over the war have peaked. Let's get more on those market moves with Bloomberg macro strategist Michael Ball. And as far as the market's concerned, Michael, there aren't ton of unresolved questions. Is that what I'm hearing?
I have no idea, guys. I was with you. I think this is very uncertain. I think there's still a lot of actually kinetic action going on as we speak. We just saw a pipeline was hit. We know there were strikes overnight. There's still this question of whether or not Thursday or Friday Iran will open the strait. There's serious problems in Asia with fuels, and we know that's starting to hit real activity. That's going to weigh on global growth. That's going to affect earnings in the U.S. We are going into the earnings season, and now what we need to know is basically, is this 2 weeks for real, or again, are we getting noise out of the White House, which has lost credibility in the last week because of all the wishy-washiness coming out in the messaging. So as far as levels, I'm not sure. We're all looking around and see where support's going to build on the SPX, which again, the rest of the risk complex will take some cues off of. But because of the sort of wider trading range we've been in, it's still very uncertain where things will settle, if we're in a new range or if it's just going to be a much larger, choppier session still.
I was looking at this FT story that basically said hedge funds had built up a record short against European stocks. How much of what we're seeing is just a pain trade?
It looks like it. And it's very expensive to hold shorts, and also with implied vol as high as it was, puts were very expensive, so you're going to see a lot of decay there. You're going to be rushing for the exit. If you're not holding on to a cash long, you're really not justified to be hedged. So if you're just speculating now, it got a lot more expensive to hold on to that speculation, especially with all the uncertainty and implied vol falling now.
You know, Sebastian Boyd from the MLive team put out a fantastic heat map that shows how much price earnings ratios have dropped in different regions and for different industry groups. It seems that after energy, which, because of the earnings side rising so drastically, materials is the second biggest discount in the market.
Yeah, look, I took a look at FactSet yesterday as well because they put out some of their guidance into the quarter of earnings coming.
FactSet, how dare you?
It all went up. I mean, things are still rising as far as EPS guidance, and materials, industrials, most of the cyclical complex is still looking quite positive. And to your point, Matt, valuations are now more attractive. And if you look at things like software and tech, they are sort of generational buying opportunities in a lot of ways, given what the last 20 years has shown us as far as PE levels.
Hey, Michael, thank you very much for joining us. That's Bloomberg macro strategist Michael Ball. In individual corporate news, Delta bracing for a $2 billion fuel hit from the Iran war, forcing the airline to stay cautious and stick to its previous full-year outlook. Joining us now is Sid Phillip, Bloomberg chief correspondent for global aviation. Sid, I mean, that sounds negative, but it feels like the read on these sets of results was positive.
So it was a bit mixed. And the airline sort of talked about how there's so much uncertainty at the moment that it's very hard to predict what the outcome will be for the full year. Airlines are having to sort of navigate this tricky path of jet fuel prices have surged. That's their biggest expense. And they have to sort of navigate how they can pass on some of those costs to the customers, but also not kill demand. And so that's really how the airlines are sort of treading as they get into the summer season, which is typically the most important season for the airline industry because that's when they tend to generate most of their money. And so we're seeing Delta talking about how bookings continue to be strong. They continue to see demand from premium travelers. I mean, Delta has really built its business on catering to well-heeled travelers who aren't as price sensitive as some of the people looking to fly on discount carriers. And that's really helped the airline sort of weather these storms. At the same time, I mean, how long demand will hold up for and how fuel will impact their sort of projections for the year, that's something that's still uncertain, and that's why the airline did not put a sort of updated guidance for the full year, saying that there's so much uncertainty out there.
By the way, I was listening to an interview with Willie Walsh on Bloomberg Radio very early this morning. He of British Airways and now IATA, and he was saying that they in Europe hedge, whereas the big U.S. airlines I know don't hedge. Why is that discrepancy, and will we then see their shares react differently as a result?
So the U.S. airlines haven't hedged for a while now, and the reason that some of the airline CEOs have said is because their fuel bills are so big that they can't afford, like essentially any sort of trade in any direction would move the market, and so it's much harder for them to hedge fuel. And European carriers tend to hedge fuel because it just sort of makes sense from an operational perspective. At the same time, I mean, we're seeing fuel shortages in some places in Europe. So whether or not you've hedged that fuel, I mean, availability of fuel, and that's sort of having an impact on airlines as well, and sort of their planning and their routes that they operate. Because if there's no fuel to sort of refuel the aircraft, then you can't really operate those routes.
Sid, thanks for joining us. That's Sid Phillip. On the latest on airlines, on Delta, and a check on markets as a big rally gets underway. I would just note, though, that we had gains of more than 2% on March 31st, nearly 2.9%. So this would actually only be the biggest day of a rally going back to a few days ago. But the big move is in NYMEX and Brent crude. Both of those are falling, on track for their biggest drop since April of 2020 when the COVID vaccine came into the conversation. Yields, those also unwinding their moves, as is the dollar, giving up its gains for the year so far, Matt.
I'm looking at, my WEI screen, and I have an EMEA view set up, and there are green boxes around nearly every single European index, which means they're moving up more than 3 standard deviations. That's a term that Tom Keene uses so often. I don't really know what it means, but it's a lot, right? 5+% for the Euro stocks gain, 5+% for the DAX gain in Germany, 4+% for the IBEX in Madrid, for the FTSE MIB in Italy. So just massive European gains, and obviously they took a harder hit. They were more exposed to the closure of the Strait of Hormuz.
And huge short positionings on European stocks, too. So the pain trade, it's clear this morning, the pain trade is higher.
Yeah, absolutely fascinating, ripping moves in European markets. Coming up, Terry Haines says Iran volatility is still the new normal, deal or no deal. He joins us next. This is Bloomberg Open Interest. Let's get out of high interest. Look what's making headlines around the world. NATO Chief Mark Rutte will meet with President Trump today, hoping to temper the president's anger that alliance members have refused to help in the Iran war. But Rutte's own allies are questioning whether his deferential approach to President Trump is appropriate or even working. Allies fear his flattering approach could weaken Europe's standing. And Moody's is cutting its outlook on Blue Owl's flagship fund to negative, citing significantly higher than peer redemption requests in the first quarter. The private credit industry overall is facing pressure as redemption requests increase and concerns mount over lending standards. A once hot hedge fund option strategy just had its worst month since 2011. The so-called dispersion trade lost nearly 5% in March after the Iran war shock drove S&P 500 volatility higher and forced stocks to move in sync. That surge in correlations erased the strategy's edge, exposing how vulnerable it is to global macro events. Dani?
To our top story, the U.S. and Iran agreeing to a 2-week ceasefire with Tehran set to reopen the Strait of Hormuz. There have been reports of initial one ship moving through. Pangaea policy founder Terry Haines says volatility isn't going away and investors shouldn't assume this brings lasting stability. He joins us now. So, Terry, the markets feel that relief. Just how far should that relief extend?
Hi, Dani. Good morning. I think it should probably extend in the short term, but not much more than that. You're going to have Iran headlines buffeting markets every day of the next 2 weeks, every minute of the next 2 weeks, as different things get tested out by both sides, as negotiations convene and continue, as it will always look more likely, less likely, depending on the minute and the hour. And I don't begrudge anybody a relief rally, but the idea that this is some sort of inexorable path to peace is misunderstood, I think, not least because we don't know what the Iranian intentions are.
I have to ask, Terry, on March 6th, President Trump put out a post on Truth Social saying there will be no deal with Iran until an unconditional surrender. And of course, we all know now that Iran has put out 10 conditions. How many of them do you think the president is going to be forced to accept?
I think it's a mistake, Matt, to assume that, I think what is the United States side, 15 conditions, something like that? I think it's a mistake to assume that there are 15 conditions of the United States side, 10 conditions of the Iranian side, and the United States is, quote unquote, accepting a bunch of things. There's very likely discussion somewhere in the middle. And we not only don't we know what those conditions are, we don't even know the scope of the discussions. Iran has always wanted a very tight negotiation based, not on anything other than a couple of different issues. The United States is looking for a much broader set of issues to be decided going forward. And I think that's very much a jump ball right now.
Terry, I just wonder, even if the Strait of Hormuz is tepidly being open over the next 2 weeks, just the state of energy infrastructure reliability in the region. There were reports this morning, first from the FT, we matched them, that Saudi Arabia's vital east-west oil pipeline carrying crude from the Gulf to the Red Sea had been attacked. There is this present risk of proxy groups being able to wage attacks on such things. Terry, can we take any comfort that as these negotiations go on, that there can be some restoration to energy flow throughout the world? My short answer is I don't think you ought to take any comfort from it, Dani. I think what markets ought to look for first is to see if Iran is sincere in its desire to open the strait. I think that's very much an open question. Secondly, there is a question about whether or not Iran can control its proxies and get it to stop attacking oil infrastructure, whether anywhere outside of Iran itself, whether it be Oman, whether it be Saudi, UAE, Qatar, Kuwait, any of those places. I think this bears looking at if you're in that market on a day-to-day, minute-to-minute basis to see if Iran's sincerity is real or not. Because if it's not, then we're going to snap back to kind of full-on war posture here very, very quickly.
Jonathan Karl from the New York Times this morning tweeted that he asked President Trump today if he's okay with the Iranians charging a toll for all the ships that pass through the Strait of Hormuz. And President Trump replied to him, "We're thinking of doing it as a joint venture. It's a way of securing it, also securing it from lots of other people. It's a beautiful thing." Do you see that as a political possibility, Terry, that we then go into business with the Iranians controlling the flow of traffic through the Strait of Hormuz?
I think the president ought to be taken seriously, but not literally in a lot of these cases. He's said a lot of things this morning about cooperating with Iran from anything from nuclear dust to lowering tariffs and sanctions. People are always discombobulated by what Trump does, but he's throwing up a fog around negotiations and, frankly, trying to put the other side that he's negotiating with on the defensive. I think those things ought to be seen in that light. It is interesting to me that the president does not automatically discount the ability of Iran to continue charging a toll, but then he's trying to get these people to yes. So flying off at the handle doesn't help in negotiations either.
I just wonder, listening to Pete Hegseth earlier this morning, Terry, and he kind of repeated this phrase of a decisive military victory, capital V. Is that sort of language, one, from the administration trying to communicate largely, we are done, we reached our objectives in Iran,
mission
and we are
accomplished.
just, exactly, mission accomplished, and we are now just looking for an off-ramp, of course, no real mention of Iran's missile arsenal or nuclear program?
I read Secretary Hegseth is trying to put an exclamation point on the administration's talking point for a while that the military objectives have been achieved. They're speaking primarily to a domestic audience there, and I think trying to paint in primary colors. I'm not defending them by saying so. I mean, there's clearly a little bit of degradation that hasn't been accomplished yet, but by and large, it has. And I think what they want to say to you is that the military objectives are achieved. I think what they want to leave out today is that we can be back to, continuing the military campaign if we choose. But I would expect that if negotiations do not proceed well over the next few days, you'll start hearing that again from the Defense Department and from the White House.
We heard from and reported former UK National Security Advisor Pete Ricketts saying that although Iran has suffered huge physical damage and has lost a lot of lives, it emerges strategically stronger. The regime has survived. It's shown the massive leverage control of Hormuz gives it. And a professor at Long Island University, Dalia Fahmy, said actually the war has cost the United States much more than anticipated. What do you think, Terry, about the costs of this war, both in terms of dollars that could otherwise be spent, on Medicare and Medicaid, and in terms of munitions, in terms of the long-range cruise missiles that allow us to keep boots off the ground in the case of another conflict?
The guns and butter debate has been going on since the Vietnam War, and it will continue to go on.
But it's more difficult now with a debt to GDP of 136%, right? Because it wasn't that high.
Unquestionably. And, and I've said for years and continue to say, markets continue to give the United States a pass on debt to GDP ratio by and large because, we're the only significantly growing economy. And, we don't look great, but everybody else looks worse, frankly. But as long as markets continue to give the United States a pass on that, largely because of the dynamism of the United States economy, I mean, that's going to continue.
Terry, how do the Republicans look, given that they campaigned literally against starting new wars because they didn't want to spend money on guns, but rather butter? I mean, that was the whole point of Donald Trump's campaign. J.D. Vance said it a million times. Pete Hegseth said he's a recovering neocon. How do they look having flipped the other direction?
Well, I think I don't look at it as a flip, frankly. This is certainly not good for Trump's politics and Republican politics. And one thing that ought to be considered that isn't thought about very much is that the administration decided to go do this anyway. And it is an indication of seriousness of the threat, which is we've all known has been going on for a while. And the seriousness of the threat of Iran to the region and beyond isn't just the opinion of the United States. The IAEA has been warning about this for roughly 2.5 years. It's one reason I've been writing about it for so long.
Well, we appreciate your writing and we appreciate your time, Terry. Thanks so much for joining us. Terry Haines there is the founder of Pangaea, policy. We come back, we'll hear the opening bell and see the start of trading on this very bullish day. Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller on really a momentous day, I think, for peace and for markets. S&P futures up more than 2.5% as the cash trade in Europe in some regions is up more than 5% on national benchmarks. NASDAQ gaining even more, 3.5% on the NASDAQ and the Russell 2000. You see and hear the opening bell. Down at the New York Stock Exchange, it looks like South American bottling, Coca-Cola bottling business ringing the opening bell. Coca-Cola shares have done well over the last 5 years, up I think 65, 70%. Down at the NASDAQ, Coin shares ringing the opening bell. And after Coin shares went public with a SPAC last week, the stock dropped 21%. The next day, it dropped another 25%. So they've been losing value for shareholders, but not for long. Maybe they'll gain it back quickly.
And it's not an easy market to list into right now.
Absolutely.
So good for them for going for it anyway. Matt, a good day for the travel stocks. They're rebounding following the U.S.-Iran ceasefire agreement. Delta, we did hear from this morning. It was a mixed picture, as Sid Phillips was telling us. A little bit more caution. They're taking a $2 billion fuel hit due to the war. Still seeing demand, especially from their premium customers. But United, Carnival, all those shares, both those up at least 11% this morning, Matt.
Energy stocks going the other direction on the ceasefire deal because of the huge drop in crude. At one point, I was looking at NYMEX crude and saw a 20% drop. It went as high as $117 yesterday, and it was down in the low 90s for a while this morning. As a result, ExxonMobil says 6% of its global first quarter production was, the stock dropped 7%, but they said 6% of their production was knocked out because of the war. So that's another story than the underlying price of crude. But Chevron is down 6%, Oxy is down 10%. So all of those companies moving the other direction, but they have had fantastic runs and are likely to have fantastic earnings. Speaking of that, we have one of the biggest bulls on Wall Street, John Stoltzfus, joining us, Oppenheimer chief investment strategist. He has an S&P 500 year-end price target of 8,100, and is it fair to say never wavered? Never wavered, John?
It never has wavered this year. And, last year we had a 7,100 target. At one point we did waver on the April 2nd tariffs that were announced, and then we reinstated it in July of that year at 7,100. We did.
By the way, did you take a lesson from that? Did you take, I hate to use the TACO acronym because it seems so petty. But, President Trump came out with these massive tariffs, saw the market reaction, and then said, hey, now it's time to buy stocks, and took them down. Did you realize because of that it would happen like that this time?
Less so that than just the fact that I think so much was at stake, not only for the U.S. here and for Iran itself, but also for Europe, for Asia, that the pressure to come to some kind of a ceasefire just would appear to us that it was inevitable, maybe not as soon as everybody expected or not as away from the fact of long to accomplish. But we are surprised at how quickly this did happen, but we never wavered. We continue, with cyclicals over defensive, still take a look for babies that got thrown out with the bathwater in technology, consumer discretionary, industrials, financials.
Isn't it different, though, just, for lots of reasons, but for one, the fact that we didn't even really sell off that much throughout this whole thing. I think before yesterday, we're down 4%. We're less than 3% away from all-time highs. Does that kind of cap just how much any sort of relief rally might take place after today?
Well, I think it actually does. I think it's a great observation, Danny. When you look at last year was an 18.9% pullback. From as I recall, it was a date in February to April 8th, as I recall. It was some huge drop. And this year, it was much less over something that would seem much more intense than tariffs being put in and, always the negotiation process that could happen with something like that, as it did. But we'd have to say that we think a lot of the things that are driving the market is that the private investor is intermediate to longer-term goals. And as a result of both indirect and direct investments that they hold, the indirect being with institutions, but they control whether they're going to add to it or take it away, the power that has is intermediate to long-term investing. Their goal is beyond, in essence. And in that, they recognize that something like this is relatively short-term, as painful as it is when you go through it. But the longer term are things, the innovation in technology, the likely improvement, as we've seen over the years in terms of earnings, as a result of the advancements in technology long before AI became the catchword of the day.
I keep going back to this chart that Sebastian Boyd put up in the MLive blog, and it shows the drop in PE ratios that we have had throughout this war. Obviously, you've had the biggest drop in energy across regions because, and here we've got the chart up on screen, because the E is expected to be so much higher. But if you look at the United States there in the second to last column, materials got 10% cheaper, industrials got 9% cheaper, consumer discretionary got 7% cheaper. What do you like right now, John, in terms of industry groups, in terms of regions after this discounting that we've seen?
I think that in terms of the industrials, that's more of a global story. And in terms of it's both the U.S. in terms of its power in our industrials having technology heavily embedded in it, but Europe also has good presence in that area. So does Japan, so does Korea, and other countries in Asia. So we'd say the industrial sector looks, especially with all the talk about how the stockpiles and armaments has gone down, it's inevitable that will have to be rebuilt. We think, again, because of technology and the need for warfare today, to be it's done with cheaper military equipment. When you think of the drones, who knows what they're going to come up with.
What about for the companies that are exposed to supply chains in the meantime, before it's built up? So be it energy-exposed companies, the travel stocks that you were showing that are rallying a lot today. Do you think even if this ceasefire were to morph into a longer-standing agreement, that there are going to be scars left on these companies that we're going to start to discern as we head through their earnings?
I think without a doubt, likely not in earnings this season, but as we move through the other quarters in the year, perhaps. But for the better managed companies, our thoughts are likely, just as the better managed companies did remarkably well through the process of COVID and prior to that, the financial crisis, in terms of recovery, the ability to bounce from it. We think that it'll be positive surprises will still propel the S&P 500 higher, not necessarily like to the moon, and not necessarily without some thoughtful retracements along the way. But it looks like we are, having been in this business since '83, I've been through every boom, bust, and recovery cycle since then. So I've heard of every reason in the world to get bearish. And sometimes it's right near term, but in the intermediate to long term, by that I mean 3, 5, 7 years out. And that used to be 20 years was long term, and it still could be. But
how much wealth is created, John? Like in your career, buying these dips. Tracy Alloway had a funny or scary tweet, depending on how you read it, saying like, if there's a nuclear winter, I'm going to buy the dip, right? Because on the other side, either my portfolio is on fire or my portfolio is on fire. But it's true, isn't it?
Well, the thing about it is when we look at it, we like to buy the babies that get thrown out with the bathwater, because when the trading floors and the trading rooms get wild with energy to get rid of positions and highly leveraged positions, they throw the whole basket out. But in the process of that, that's where you find your really well-managed companies, your well-positioned companies in terms of their client base, in terms of their managing their suppliers. Those are the ones you want to get. We always say, don't buy the dip, buy the babies that get thrown out with the bathwater. And we found that in portfolios that we manage to be a remarkably good thing to do. We've had a very good results. I'm not going to pitch my results, but last year we surprised a lot of people
with your own book.
Dividend portfolio. Well, we were well in the double digits in terms of return, and this year we're still positive in our dividend opportunity portfolio, but we're across all 11 sectors, and we're very selective of what we own. We ride our winners. We're reluctant. Sometimes we trim and add something, but we always say when you get these dramatic moments on the downside, you usually find somebody who'll say, now's the time to get defensive. And we usually say, I think it's a little late to do that. It's like, it's quick. Look for those babies, because they're these really good companies. And just think, when you think of the tech bubble, The tech bubble, my gosh, it was 26 years ago. That's a long time. Tech was primitive then. When we hear all this stuff with the AI and when are they going to be profitable, probably a lot sooner than expected, but again, not as soon as many would like to see.
The timeline is accelerated in so many ways.
Yeah, I feel like in 5 years from now, we'll look at this point and be like, oh, AI was so primitive then. It was so cute, us and our little chatbots. John, we're going to have to end it there. Thank you so much for joining us.
Thanks for having me.
Always a pleasure having you.
So great to have you, John Stoltzfus of Oppenheimer. And by the way, a lot of those babies that have been thrown out with the bathwater getting bought this morning. Look at what's dominating. It is tech. It is consumer discretionary. If you look on your move screen, most stocks are higher this morning. Only about 100 are lower at the moment. 102, as a matter of fact, are lower. What's leading us? It's NVIDIA, it's Amazon, it's Broadcom. So it's all of the big mega cap tech stocks that are doing very, very strongly. Meta, Microsoft, Alphabet, Apple. To the downside, it will not surprise you that it's the energy names. Exxon down nearly 7%, dragging the index down by 5.5%. Chevron, ConocoPhillips, J&J, Verizon, AT&T. So you also get a feeling of some of the safety utility type stocks, and those are the two indexes that are down. Energy, it's on track for its worst day since April of 2025. It's undone a month of gains. Industrials, consumer discretionary, infotech, those stand at the top of the pile for a gain of about 2.5%, Matt.
All right, coming up, the U.S.-Iran ceasefire eases fears, but strikes in the Middle East are persisting. We'll speak with Jennifer Gavito, former Deputy Assistant Secretary of State for Iraq and Iran, next. This is Bloomberg Open Interest.
It is a relief rally. Terry Haines, though, cautioning just how long that relief can last. But we have a big rally on our hands. NASDAQ now up 3%. We are less than 3% away from all-time highs, despite the fact there's a lot of fragility in the ceasefire. But Brent crude, a huge drop, 15%, on track for one of its biggest drops in a few years at this point. Let's look at some of the top calls, some of the analyst action that we're focusing on. Barclays, they have downgraded Coinbase to a sell. They say the slump from earlier this year is likely to continue into next quarter, which could hurt profits as fewer people buy and sell crypto. I'm going to assume, though, that Bitcoin is rallying a lot today, so Coinbase is up nearly 5%. Next up, MoffettNathanson is upgrading T-Mobile to a buy, saying the company has been gaining a steady stream of customers from rural areas over the past 10 years. Look, hard to make any calls or upgrades and downgrades and have the stock move accordingly because it's the macro that's moving everything. T-Mobile moving lower as a lot of those safety type stocks move lower. And finally, Roth Capital Partners, they're downgrading oil stocks as a ceasefire in the Iran conflict drives a sharp drop in crude prices. I mean, duh. The firm says that fast money piled into E&Ps and it raised the risk of a pullback if oil keeps falling, and a big fall in oil stocks we are seeing at the moment. Diamondback Energy down 7.2%, Permian Resources down 7.8%, and SM Energy that is down 10.7% this morning, Matt.
Guess what?
What?
Bitcoin is rallying
There we
today.
go.
Good assumption. Up right now 3.5% to $71,706. Now, the U.S.-Iran ceasefire is offering relief to investors, but key risks remain unresolved, and the energy shock may be far from over. Joining us now is Jennifer Gavito, Senior Advisor at the Cohen Group. Jennifer has held senior positions at the State Department and National Security Council, influencing decisions on critical regions, specifically Iraq, Iran, and Libya. Jennifer, great to have you on the program. You know, one of the things, one of the criticisms I've heard a lot over the last couple of days is that we have now confirmed the power, the control that Iran has over the Strait of Hormuz and how important that is for the global economy. Didn't we always know that they had that power? Like, wasn't this always a risk, or was it a surprise to the Trump administration?
I think both of those things are true. And first, thanks for having me back on this morning. Iran has always had the power to close the strait. That has long been known, but it really had determined that that was a nuclear option, and so had never exercised that. It wasn't until this set of strikes began that we saw Iran kind of realize that vision. And it seems, at least in these initial hours after the ceasefire agreement, that there is some acquiescence on the part of the United States and the international community that control may continue in some form.
So what now, Jennifer? when seemingly ceasefire for 2 weeks, but seemingly the two sides very far apart still.
You're absolutely right. They are very, very far apart. And if, in fact, the 10-point plan that has been widely seen as far as the conditions for Iran for the ceasefire are the basis on which the negotiation is happening, it is hard for me to imagine that the United States, let alone Israel or allies in the region, will be able to accommodate some of those demands. I do think, it has to be said that the ceasefire is a positive step. We have always said that this conflict was never going to be resolved militarily. It would always require a diplomatic solution. And a diplomatic solution was never going to be possible in those, 12-hour, 24-hour, 48-hour windows that the president had issued. And so 2 weeks does provide a reasonable basis to see what may be achieved. But again, looking at the conditions, I think that both sides have and the red lines that we know exist, again, for both parties, not to mention, again, Israel, it is very difficult at this moment to envision how a sustainable end to the conflict is reached.
How much has this excursion cost us, Jennifer? Pete Hegseth this morning in his press conference for President Trump said that we've only expended 10% of our military power. But we also had a story last weekend that said, before this war, we had 2,400 of these long-range air-to-surface cruise missiles, and now we've only got like 450, and we're collecting them from other regions around the globe and bringing them to Iran.
Well, so for good reason, those numbers are not well publicized. I think that, it depends greatly on whether you're talking about defensive capabilities or offensive capabilities and what specific capabilities are in question. But certainly this has been a costly conflict so far. Over a dozen U.S. servicemen died as a result of it, not to mention the financial cost and the cost to our national security. I would add to that some of our key relationships, particularly with Europe, have also been strained. And we're hearing this morning that Israel is quite frustrated by having been cut out of the negotiations over the ceasefire. And so I think it will take some time to determine what the military cost of this has been specifically, and how the U.S. may be able to bounce back from that by increasing production lines. But in the meantime, I think that the problem is a bit broader than that.
I'm not sure if you've seen Alex Wickman put out a story this morning saying that the ceasefire has reinforced views also among our adversaries, not just our allies, but our adversaries, that the U.S. is maybe weaker than thought. That's the view from China. That's the view from Russia. All right. How much has this set us back in those terms?
Well, first of all, I think it's important to remember that there have been key beneficiaries of this conflict, Russia being one of them, with the removal of oil sanctions that now permit it to restock its war chest for its fight against Ukraine. So Russia has been a clear winner in this conflict. China, it's been reported, played a role in the mediation that led to yesterday's ceasefire. So again, contributed to international legitimacy there. But as far as, where the United States comes out of this, we don't yet know what the final terms of a long-term into the conflict may be. But I think that there are some key questions. And chief among them are, a month ago when this began, the Strait of Hormuz was open for free flow of travel. This morning, even after the ceasefire, that is not the case. Iran is, as I understand it, demanding some sort of toll for passage of ships, and that looks to be its long-term intent. And so are we fundamentally in a better position today than we were a year ago? You can argue that the United States has had significant tactical and military success against a wide range, tens of thousands of targets inside of Iran. But when it comes to strategic objectives, including the reasons that were initially laid out for entering this conflict, specifically degradation of the nuclear program, degradation of regional proxies, and ensuring that Iran cannot project its power outside of its borders, I'm not sure that any progress has been made on those.
Okay.
And added to that, we now have arguably a harder line regime in place than we began with.
Yeah, it's the big fear for this moment. Jennifer, I'm sorry to jump in. We're just up against a commercial break. Thank you so much for joining us. Jennifer Gavito, Senior Advisor of the Cohen Group. Exxon says 6% of its global first quarter production was knocked out because of the war in Iran. Bloomberg senior U.S. oil reporter Kevin Crowley broke this story and joins us now from Houston. Kevin, what did you learn from Exxon?
Well, they said this morning that two of its major countries, Qatar and the United Arab Emirates, were severely affected by the war in Iran in the first quarter, both in terms of the closure of the Strait of Hormuz and, in the case of Qatar, direct attacks on two of its liquefied natural gas plants. Now, typically, this production represents about 20% of its global worldwide production, but because the war was made mostly just in the month of March, this translated into a 6% drop in Exxon's first quarter production compared with the previous quarter.
What will that mean for earnings, Kevin? We only got 30 seconds, but how strong are Exxon's earnings going to look since the price went up?
So it's a messy quarter. They are going to take a big a derivatives charge on cargoes that were sold but not yet delivered. But they expect that to fully unwind over time. But excluding that anomaly, they expect earnings per share to be up, mainly because of higher oil and gas prices in the period.
All right, Kevin, thanks very much. Sorry we had to cut that short because it's such an important story. I hope to talk to you about this again very soon. Kevin Crowley there. Next time it won't be so quickly. Coming up in the next hour, Ellen Hazen of F.L.Putnam joins us as this relief rally sweeps through global markets. And then the CEO of Hyundai and Genesis, José Muñoz, on the company's Made in America push, plus Rachel Bronson from the Chicago Council on Global Affairs. We are 30 minutes into the trading day and seeing a 3 sigma rally in European stocks. This is Bloomberg Open Interest. I'm Matt Miller.
And I'm Dani Berger. But for U.S. stocks, you know this is the only the biggest rally in a week.
Yeah,
on March 31st, we had a bigger rally than we're having today, but it still is a lot of relief in this market.
Also wait till we get into it, because a lot of times this market moves a hell of a lot between this show and when Romaine and Katie come on at the close. So you could see a build-up here. I'm not saying it's going to be the kind of 5% move you see in Germany or on the Eurostoxx 50, but...
And to be fair, oil is having a massive move to the downside.
Absolutely. I mean, at one point I saw a 20% drop for an IMEX crude, down from 117 to 93.
I think it was one of the biggest drops we've seen since COVID times in 2020.
Yeah, and we're still seeing a pretty high price as well for oil for physical delivery. So it'll be interesting to see if that comes down. Coming up, we're going to talk about this ceasefire, not only calming, but invigorating markets as strikes reportedly continue and a lot of key issues remain unsettled.
And as we were mentioning, oil plunging now below $100 a barrel. Iranian TV reporting that the first ship has passed through the Strait of Hormuz with Iran's permission.
And Delta jumps while Exxon slides as corporate America recalibrates after the oil shock from the Iran war.
President Trump says that the U.S. is discussing sanctions relief for Iran, acknowledging a key ceasefire demand from Tehran after he threatened to destroy the country. Defense Secretary Pete Hegseth spoke this morning.
Operation Epic Fury was a historic and overwhelming victory on the battlefield. Iran begged for this ceasefire. Iran's Air Force has been wiped out. Iran no longer has an air defense, any sort of a comprehensive air defense system. We own their skies. Their missile program is functionally destroyed.
Joining us now is Wayne Sanders, Bloomberg Intelligence Senior Defense Analyst and retired Army Colonel. Colonel, Pete Hegseth declaring a military victory, but just looking through some of Iran's 10 points as we understand them, lifting sanctions, which it seems the president might do some of, unfreezing its oil money held in reserves, allowing it to essentially dictate the regulated passage through the Strait of Hormuz. It feels like had Iran presented this set of lists of their points before the war and during negotiations, they would have been considered fanciful.
Yeah, I would agree. I think that one of the ways that they're looking at this right now is how can they make sure that they're saving face in the eyes of the world, right? They've been able to hold off the great America up until this point, and they've been able to provide impact and influence over the Strait. Just by the threat of violence in that area. So I think that they're trying to capitalize as much as possible right now during this ceasefire timeframe. But it's going to be very difficult with proxy still out there, and like you mentioned, some of those strikes still taking place.
I mean, when you said they're saving face, I didn't know if you meant the Iranians or Pete Hegseth and President Trump, because they continue to repeat that we have a totally and completely new regime here, which I think most of the world doesn't believe. They continue to say that this excursion hasn't cost us very much, which I think our own Congress will find hard to believe when they ask for a 50% increase in the military budget. Hasn't this been an expensive excursion in order to keep the same, possibly even more hardline regime in place in Tehran?
Yeah, I mean, if you look at the defense spend, we're well over probably $150 billion worth just from this month alone for the last 40 days, $11 billion during the first 6 days. So some of that surge capacity, as well as, when you start looking at protracted conflict, the cost alone does come at a cost as well. You look at our munition stockpiles as well. You start looking at our interceptors and things that would actually help us support a conflict in potentially 2027 and beyond against a near-peer adversary. Those are obviously very key. So they have come at a cost. It's very difficult when you look at the way that the military. It is a military strategic objective that they have been successful. But the problem is that when you're dealing with an asymmetric threat type country like Iran, who sees this as an existential threat to their entire survival, it is not the same as if you were trying to go after a conventional military anywhere else.
If we saw China go to take Taiwan right now, Colonel Sanders, how prepared would we be to stop that?
Well, I think one of the most difficult pieces there is the military readiness of our carrier strike groups, because we have them positioned overseas, right? We have them near the Persian Gulf. So being able to move them across the country to be able to do that. We still have long-range missiles. We still have capability and capacity, but you're really looking at a very short, small window, right? It's a reaction period that we would want to be able to interdict and support Taiwan in that scenario. And so we would have less than optimal amount of capability. And that is one of the decision calculus that the National Military Command Authority had to put into place and say, if we go over there, are we willing to assume that risk in the Pacific?
Yeah, and I mean, at the moment, we don't even know if this ceasefire is going to hold up, with the Iranian state media saying they're weighing a response to what they say is Israel's violations, with a seeming difference over whether Lebanon is included in this or not. Retired Army Colonel Wayne Sanders of Bloomberg Intelligence, thank you so much for joining us. Let's get the view from Wall Street. Ellen Hazen, Chief Market Strategist and Portfolio Manager at F.L.Putnam, joins us now. Ellen, thank you so much for coming on. How are you handling this volatility, both in headlines and in overall markets?
Thanks, Dani. I think that the volatility this year was not unexpected. We started the year at expensive valuations, and whenever you have that, then whenever volatility happens, whether it's Iran, whether it is something else, you're going to see a lot of volatility in the market. So the question is, how long is it going to last? We don't know. 2 weeks, maybe 4 weeks, 6 weeks, longer, I don't know. What we do know, though, is that the market has been telling us, and this has been consistent for the last month, the market has been telling us it's not going to last that long. Why do I say that? Look at the inflation futures, right? The break-evens were shot up for this year, but for next year, they only increased a little bit. Similarly, if you look at earnings estimates, they're still going up. If you look at the yield curve, it moved up pretty evenly. So if you look at the oil curve, right, it went into backwardation, but only really for the first year, natural gas for the first 2 years. So the markets were telling us, and the markets are really a combination of some of the best thinking in the world. They're often right? The wisdom of crowds. They were saying it's not going to last that long. So if you believe that, right, if you take that as a given, then you use this opportunity to buy the high-quality areas, the high-quality stocks, the high-quality sectors, knowing that the volatility is probably going to continue.
What do you want to stay away from, given the disruption we've seen in the energy sector? It's not so easy we hear restart oil wells, especially if they've been severely damaged. That could affect the earnings of companies that are, very exposed. We've seen what happened in Europe, for example. So where do you want to stay away from as you go in and look at the discounted assets in the market?
A couple things. So first of all, generally speaking, you want to go with quality. I'm always looking at return on invested capital. So that's a key metric for me when I'm looking for individual stocks or sectors. So regardless of the exposure to oil, you want to look for high quality companies, because that is going to give you a lot more margin for error, margin of safety, as compared to a lower quality company, a lower return on invested capital company. As far as energy goes, I think it does make a lot of sense to look at the exposure to energy, what that's going to do to earnings, whether or not they've been able to hedge it, et cetera. the good news about the U.S. is that we're a net energy exporter. So we're much less affected than some other areas of the world. And so I think that in this particular environment, if you thought that energy was going to continue to be unstable and it takes a long time to restart these, then you want to stay in the U.S. And Europe in particular is more of an energy importer. So it is going to hurt them a little bit more.
I was just thinking more about what you said about the wisdom of the crowds, of this market pricing out some of the worst of the conflicts pretty quickly, be it in the futures curve or what have you. I wonder, though, if something has kind of changed about the nature of this market. And I was also thinking about this because Matt and I were speaking with John Stoltzfus of Oppenheimer, who said he had originally written down his S&P year-end target on Tariff Liberation Day and then had to quickly undo that. So he's like, I'm not making that same mistake twice. I wonder how prevalent that is in this market right now, of just people who have been burned by adopting either a lower outlook, a more bearish outlook, outright shorts, who've just been burned before and said, I'm just not doing it this time around.
I think that it is difficult to have a year-end S&P target in general, right? Even if you don't have this kind of volatility, even if you don't have Iran or Liberation Day or anything else. I think it's a parlor game that Wall Street strategists are forced to play, let's just say. But I don't know that it really is a meaningful metric to be looking at.
A lot of people have stopped, by the way, you know?
Exactly. I think as I look at what we're doing for our clients and what we're recommending for our clients, we're trying to keep the time horizon long, right? We're helping people invest for their retirement. We're helping endowments and foundations invest for the long term. And so I don't need to have a year-end S&P target in order to do that. We're looking for, okay, what is the range of outcomes? Have the probabilities shifted so that the more negative outcome is maybe more probable? And then how does that impact where we want to invest? And if you look longer term, I mean, look at the S&P earnings estimates. They keep going up, right? Even
308, I think, is the
even just for the quarter, for Q1,
right
for Q2, Q3, Q4. You look at it excluding the Mag 7. You look at it including the Mag 7. You look at small cap earnings. They keep going up. And again, wisdom of crowds, right? Is all of Wall Street with these bottoms-up estimates going to be wrong? Right now, it looks pretty strong. And you add that to the stimulus we had coming in, the hyperscaler CapEx, the fiscal stimulus with OBBBA, and the monetary stimulus from all those cuts that still haven't completely flowed through the economy yet. And there's a lot of reason to be optimistic. So I think stay focused on the long term. Try not to do things that are difficult to do. Try not to invest in companies that are low quality because you just have less margin of safety there.
A voice of reason in what feels like an unreasonable time. Ellen, thank you so much for your time this morning. We appreciate it. Ellen Hazen of F.L.Putnam. Let's get a check on your equity market this morning. About 40 minutes into your cash equity trading session, S&P up 2 1/3%. NASDAQ, an even better day, 2.8%. Some of the software stocks, though, off of the highs. That was surging. Now they've come back in, but still this big decline in oil. We're below $100 a barrel for both NYMEX crude and Brent crude. We're falling 17.8%, 15.5% for some of the biggest drops that we've seen in about 6 years or so.
All right, let's get a look at some of the single stock stories at this hour. Energy stocks, all of those, well, this is a triple stock board, but all of them falling right now because the price of oil is off, and ExxonMobil specifically saying 6% of its global first quarter production was knocked out because of the war. Also watching travel stocks rising following the ceasefire agreement. Delta out with a cautious outlook this morning, expecting to take a $2 billion fuel hit, but its stock is up still 8.5%. And fertilizer stocks had risen on fears of supply disruptions from the war, giving back those gains. CF Industries, Nutrien, and Mosaic are all down.
Coming up, Bill Ackman's billion-dollar bid to shake up Universal Music Group may be the latest sign that activists are changing their playbook. We're going to get insights from Darren Novak, Global Co-Head of Shareholder Engagement and M&A Capital Markets at JPMorgan. That's coming up next right here on Bloomberg Open Interest. Billionaire activist investor Bill Ackman trying to shake up the music industry with a bold $65 billion proposal to revalue Universal Music Group. Both major shareholders skeptical and the deal far from certain. It's raising questions about how activists are evolving in today's uncertain market. Here with some perspective on activism is Darren Novak, Global Co-Head of Shareholder Engagement and M&A Capital Markets at JPMorgan. Darren, thanks for joining us. And you are probably insanely busy because it has been such a busy first quarter. 110 campaigns, I believe, is what the U.S. Bloomberg data suggests that we saw. Despite macro risks, despite AI shakeups, that didn't stop activists from launching new campaigns. Why has it been such a busy period?
It has been tremendously busy. And it was really busy in 2025, where there was a lot of volatility then as well. And really, the activists are opportunistic, but they're fundamentally looking for great companies, generate a lot of cash, that are undervalued. And then there is some sort of catalyst that can occur, and typically M&A. And so when you had a very robust M&A environment in 2025, continuing into the first quarter this year, it provides activists with a tremendous amount of opportunity. And that's in the U.S., that is in Europe, that's in APAC and Japan in particular. Last year, the amount of activism was in fact up 32% in terms of public campaigns. In Japan, it was up 91%. And Europe continued to pace. And first quarter this year, we're just seeing it continue.
Do you have a lot more opportunity when there's this kind of volatility?
Absolutely. The activists are looking for, again, those great companies where there's undervaluation. And what we're seeing with boardrooms right now at a lot of these companies that are experiencing the undervaluation is a difference in tone. It's a frustration that here we go again. We've got a great company. The fundamentals are strong. Yes, there are complications, but we can't get our valuation up. And then you have these long-term shareholders that are also feeling the same sort of frustration. And so boards, management teams are trying to get ahead of it. And in part, some of the reason why you see such incredible M&A activity.
So, to your point, there's been a lot of M&A activity. It was a record first quarter in 2026, which I also think surprised a lot of people. But noticeably absent was private equity-led M&A. It was a lot of corporate M&A. What difference does it make for that to be less of a route if private equity isn't as involved in the deal-making environment this time around?
Well, certainly the way that activists are looking at opportunities, often private equity interest is core to it. But when you have such tremendous strategic interest, that's even better for the activists, because often they can provide a higher valuation. And when you're seeing, especially, most activism occurs in that 1 to 10 billion market cap space. And it's true in the US, it's true in Europe, it's true in APAC, and it's true now for many, many years. It's because many of these companies aren't receiving the benefits of scale. And so that, in part, is what the market is taking advantage of, and why these companies are very susceptible to potential activist interest.
Are boards more accepting of activist discussions than they have been in the past, or less?
From my perspective, they are more accepting of constructive activist discussions. Now, the activists are coming from outside in. They don't have the benefit of the complexity that companies get to see and boards get to see, in particular, where there can be impediments to certain types of transactions, certain sort of events that the activists are looking for. But if the activist is coming with a well-conceived thesis, then boards are increasingly willing to appropriately engage and see if there is some sort of path or not. You know, fundamentally, companies agree that we're undervalued, activists agree that we're undervalued. But what is the path to, in fact, unlock that undervaluation? And that's where there could be a difference.
I just wonder what best practices are. You know, if you're doing your MBA at Harvard Business School, what does the professor tell you how to deal with activists when you become a board member someday? You know?
You definitely need to engage. In part, it's because your institutional shareholders are expecting you to engage. For many of these big brand name activists, many shareholders believe that these are smart investors. And so you should at least have the discussion with the activists. You may ultimately have a difference of opinion, but these campaigns are won and lost not because the activist's right or the company's right. It really is, what are your shareholders, in fact, thinking more broadly? It's often, as we say, you have to win the hearts and minds of all of your shareholders.
What difference does it make, though, that it seems, anecdotally, I'd imagine that the data would back this up, that we're seeing a lot of either first-time activists or non-activists using activist-like techniques. T. Rowe Price, for example, I think had fought back against a transaction that happened last year. New ones like Palliser, Irenic, that's in Snap. Mm-hmm. What difference is that making to have these first-timers come around?
Well, it depends on who the first-time activist is. So these funds that have been started by people who worked at the large activist funds, they're very, very sophisticated. They believe, though, at times that they're still at their old fund and therefore expect the same sort of level of engagement and so forth, the same level of traction with other investors, and that isn't necessarily the case in some of these situations. And so that can make it a little bit more complicated for a proper constructive discussion. You have other first-time activists that really have no activist experience, and activism is a hard game. It's a very difficult process to go through successfully. And they think just writing a public letter can actually be successful. And that isn't necessarily the case. It really requires some proper engagement with companies, with shareholders, to get to a path that in fact works. Or it doesn't work if the company ultimately believes that that isn't a correct path.
Is there a benefit to waging a takeover battle with a company that you realize you're not going to be able to take over? I just saw yesterday the story of Bill Ackman, and we were talking about it earlier. Looking to take over UMG, even though it's not clear that Vincent Bolloré and Vivendi are on board with that. And I'm not asking you to comment on that specific situation, but is there a reason that you would do that?
Yes, and there are more funds thinking about it. Now, some of the funds are thinking about it from a pure economic perspective. They want more permanent capital. But the strategic part is also critically important, especially outside of the U.S., where you have a different dynamic in terms of how companies think about strategic alternatives. Just announcing a strategic alternative in Europe and Japan isn't necessarily a great sign. It can actually signal some problem. And so it can be very frustrating for U.S.-based activists, and they go in and they say, hey, you should do a strategic alternatives review, and the company says, no, we're a public company. Someone wants to make an offer, go ahead. And so you're seeing these funds making the offers and then putting them into play. Now, there haven't been a lot of them, but this is a newer technique, and I think many of them are thinking about this as a technique to push companies into play.
So just a publicity play then?
Part publicity, but I think fundamentally many of these funds, they have private equity backgrounds. They are doing the same sort of homework that private equity is doing. And at times they could be very much willing to own the company, but no problem, someone else actually comes in at a higher price.
Or they bid the shares up, right? If
exactly.
Someone who is famous, has a huge following, has been successful in the past, says, I want to take over this company, then maybe other investors say, I better buy it first.
Absolutely, and that's why this environment is constantly changing. The fundamentals of what activists are looking for have remained the same, but the techniques that they use are constantly changing. And for companies, which of course that's who we advise, we need to be prepared for that. It can come in a variety of shapes. It's not just the way that it's been done the last 5 years. There could be newer asks. We're seeing right now some activists coming in and saying, listen, great company, but there's a problem. Here are some of the reasons for the problem, and not giving any solution, even though clearly they've done a ton of homework, and basically saying, just put us on the board and we'll work with you to come to the solution. Right. And that's a very hard thing for a company to, in fact, engage with.
All right, Darren, thank you very much for joining us. That's Darren Novak of JPMorgan. And tune in to Bloomberg Deals today at noon. We'll be speaking with Joe Baratta, Blackstone's global head of private equity. When we come back, more on these markets and this very tepid truth, the latest line, Iran to withdraw from the truce deal if attacks on Lebanon continue. More coming up just after this break.
Let's get a check on the markets right now. We see the S&P 500 up 2.25%, 67.67 the level there, and the Nasdaq rising even more, 2.8% right now. NYMEX crude gaining losing 16%. At one point it was down to $91 a barrel. Right now at 94.58. Brent trading at 93.49. Of course, those are different contracts. I was at the New York Auto Show yesterday. We are going to talk about automakers coming back, doubling down on U.S. production.
With the tariff, it's been an accelerator in the right direction. We've been forced to accelerate the localization in the U.S. A year ago, in the month of January, 45% of the cars we're selling in the U.S. were made in the U.S., and now we're above 60%. And the objective is really to reach an 80%.
That was Nissan America's Chairman Christian Munier last week on Open Interest, making the case for Made in America. Well, Hyundai is making a similar push. The automaker is investing billions of dollars in U.S. production, including its Georgia EV hub, and looking to expand into pickup trucks and big SUVs. Core U.S. segments that have long been dominated by Ford, GM, and Toyota. Joining us now at the desk is Hyundai's CEO, José Muñoz. He's here for the New York Auto Show. And Jose, appreciate you joining us. I was at the auto show yesterday. I got to see the Boulder, which is your concept large SUV. Looks fantastic. And I had thought, it must be so difficult to come in and compete in this space because the U.S. automakers have long dominated because of the chicken tax. But you'll be building, I guess, if you do go that direction, you'll be building it here.
That is the plan. Thank you for having me, Matt. Always a pleasure to visit you. Well, as you know, we have made a big commitment to invest $26 billion in the next 4 years. And this is after $20.4 billion that we have invested in the last 40 years that we've been in the country that we celebrated last year. As part of this commitment, we want to increase our capacity in the U.S. to 1.2 million from 800 to 900,000 today. And then we want to increase our supply chain, including a steel mill in Louisiana, and then additional investments in technology like robotics, AI, data centers, so on and so forth. But the most important that we have announced during the New York show last week is that we're going to introduce in the market 58 new products. 36 are going to be Hyundai products, and 22 they're going to be Genesis. And then through the next 4 years. And then the most important for us was the introduction of the Boulder concept. Because when you look at the behavior and the performance of the brand in America, I think we do pretty much a good job. So we just ended Q1 with an all-time record. We had the 2025 overachieving 1 million wholesales for the first time ever. And we're thinking how we can continue to grow and link this to our commitment to America for America. And we thought that the only segments where we are not competing today are the body on frame. We got a fantastic review by the press, so thank you, Matt. Everybody loved the designs. I can tell you that the reality is going to be better than that. Yep. Our designers never disappoint us.
I will tell viewers who don't know, body on frame means it's a much more robust vehicle. That's a truck, right? As opposed to the unibody cars. And you need that in this region because of all the potholes and broken down roads that take a beating. But it's one that has long been dominated by U.S. players because of this tax. We have a 25% tariff on light-duty trucks built overseas that come in here. Where would you build such a body-on-frame vehicle?
Definitely here in America. This will be part of our strategy to be localized, to be vertically integrated, part of the $26 billion. So we want to make it here with our supplier base and then to the taste of the American consumer.
These, though, are very long-term plans that you've put in place. So I'm assuming short-term fluctuations in consumer behavior isn't going to change that. But are you seeing changes in consumer behavior now having to deal here in the U.S. with gasoline above $4 a barrel?
Yeah, we see that all the time. So our strategy is being different to other OEMs in the sense that we want to offer the customers what they want, when they want it. And as such, we not only invested on EVs, but also on hybrids. We're going to start producing hybrids this year in our HMGMA plant in Savannah. And we have also announced that we will introduce ER-EV, extended range EVs, next year in the country as well. So that's how we came to the conclusion that, if consumers want more EVs, we have to produce more EVs. If they want more hybrids, we have to produce more hybrids. If they want for example, Boulder type of vehicles, we will. But to your question, we have seen a significant change in the dynamics. So, for example, in the month of March, we've seen an increase of EV sales of about 40% compared to February. So definitely when the American consumer sees an increase in fuel prices, they try to move to solutions which are more friendly in terms of cost, right? Yes. Especially in states like California.
We saw today that this administration isn't going to give any help on aluminum and steel tariffs to automakers that produce here. Are you penalized to some extent for producing a car here? Because if you made it in Korea, you might get just a 15% flat tax. And when you build a car here, you've got to pay the 50% on aluminum, 50% tariffs on steel. You've got to pay the tariffs on all of the components that come together. And Ford says they end up actually paying more to build a comparable vehicle than you do when you make it in South Korea.
Well, that's a very good point. That's why, in our case, the strategy is very simple, is localization. And that's why we are going to produce this boulder with steel made in America. So full integration, the steel, the logistics, the components, the manufacturing, the workers, everything is going to be made in America, including the steel.
I have to ask you about Magma, which is the your answer to AMG or BMW's M. I saw the wingback concept yesterday, which was fantastic. I know you're going to race at Le Mans, which is increasingly becoming like the Davos of car manufacturers. Can you really compete against BMW? Can you compete against Mercedes? Can you compete against Audi with that vehicle here, with that brand here in America?
Without a doubt. So last year we sold an all-time record 82,000 Genesis in this market. And then last year we also achieved our 1 millionth Genesis sales. So we've been the fastest growing luxury OEM globally because we did that in only 9 years and 6 months. So faster than Tesla, faster than other luxury competitors. So, and definitely as a part of the evolution, as a next frontier for our luxury brand, we wanted to get into the competition, so the World Endurance Championship. So you have an open invitation, Matt, to be able to join us in Le Mans. And then it needs to be real. That's why we came up with the Magma Orange and the Magma concept, which if you saw the numbers, a GV60 gives you a standard mode more than 600 horsepower. But if you push the boost motor, so you're going to get to 650 horsepower for about 15 seconds. So this is the Bloomberg boost, or the Matt boost, if you like. 3.4 seconds to make it to 100 miles.
Is F1 next?
That's upon next, yeah. So you can try. So we're going to be credible contender, and it's going to be real performance.
All right, Jose, great having you here. Thanks so much for joining us, and I look forward to seeing you on the track at Le Mans as well. José Muñoz there, the CEO of Hyundai and Genesis. Be sure to listen to Hot Pursuit, by the way. That's my autos podcast with Hannah Elliott. And you saw some of the video of me there at the car show with Christina Ruffini, because Bloomberg this weekend is going to show a big piece about what we saw and did at the New York International Auto Show, and it was a lot of fun.
I'm really looking forward to that. That airs, what, Saturday, Sunday?
This weekend.
One of them.
Whenever this weekend is.
This weekend it'll happen. Let's get a quick check on your markets, because we have had some headlines.
That's the Magma Orange, by the way.
Beautiful car. That is a really nice color.
Yeah.
I almost match it this morning. Let's change gears a lot. A lot of headlines coming from the war in Iran. These, according to Fars, the state media of Iran, that passage of oil tankers via the Hormuz Strait has been stopped. There seems to be some concern over the ceasefire, whether Lebanon is included in it or not. The U.S. and Israel has said that it does not include Lebanon. However, Iran saying that they will withdraw from the truce deal if attacks on Lebanon continue. A slight reaction, a slight come down from the biggest of gains. Yeah, to Matt's point, not a lot. We're still up 2%, 2 3/4% for NASDAQ. NYMEX crude and Brent are still down at least 13%.
All right, coming up, Washington weighs sanctions relief for Iran as this ceasefire deal, well, if this ceasefire deal continues. Rachel Bronson of the Chicago Council on Global Affairs joins us next. This is Bloomberg Open Interest.
Operation Epic Fury was a historic and overwhelming victory on the battlefield. A capital V military victory.
We hope that Iran chooses a lasting peace. Let us be clear, a ceasefire is a pause, and the joint force remains ready, if ordered or called upon, to resume combat operations.
Defense Secretary Pete Hegseth and Chairman of the Joint Chiefs of Staff, General Dan Kane, speaking this morning. But a fragile ceasefire appears to be taking hold, if it is holding. Kaylee Lyons, co-host Balance of Power, joins us now. Kaylee, we're understanding that passage of tankers via the Strait of Hormuz has been stopped. What is the state of this ceasefire?
Well, that's according to the Fars news agency in Iran, Dani, which just speaks to how this is all a very tenuous situation. And even if there is to be traffic in the strait reopening to a certain degree, even President Trump himself said it's still going to need to be done in coordination with Iran's armed forces. So this is not the absolute free flow of trade throughout the Strait of Hormuz that we were seeing prior to this conflict beginning over 1 month ago. That said, it does seem that what Iran's concern here is primarily, according to the Tasnim, semi-official Tasnim news agency, is that there needs to be a ceasing of not just the firing that was taking place directly between the U.S. and Iran, but in Lebanon specifically, where Israel is still at war with Hezbollah. And Israel has suggested this 2-week ceasefire is not applicable to that front in the north. And that is something that Iran would like to see change. So clearly there are a lot of details that still need to be figured out here if this is to turn into a more lasting peace and cessation of hostilities. Of course, President Trump said it's really just a matter of finalizing a deal. He said it could include looking at tariff and sanctions relief for Iran, as well as guaranteeing that Iran cannot enrich uranium and digging up remaining nuclear material that may remain in the country. But it goes to show you that there are still strategically objectives that the U.S. may be trying to seek out here that we can't necessarily say have been a definitive victory yet, in guaranteeing Iran cannot have a nuclear weapon, in guaranteeing free transit through the Strait of Hormuz, even as we heard there, the Defense Secretary Pete Hegseth and President Trump himself have claimed that this has been an outright military victory with the destruction of so much of Iran's military capacity and its defense industrial base. There are still major strategic questions here.
Kaylee, Jonathan Karl, who is the chief Washington correspondent for ABC News, tweeted this morning that he asked President Trump if he's okay with the Iranians charging a $2 million toll on ships passing through the Strait of Hormuz. And President Trump told him, quote, "We're thinking of doing it as a joint venture. It's a way of securing it, also securing it from lots of other people. It's a beautiful thing." Have you heard talk that the U.S. is going to be working or hopes to work together more closely with Iran on a number of economic ventures in a way that the U.S. could make money out of this truce?
Well, Matt, the president has actually suggested this previously. Weeks ago, he suggested that control of the state could be shared between him and the Ayatollah, whoever that may be. He also, of course, has said that the U.S. is planning to help out in the Strait of Hormuz with relieving the backlog of some 800 ships that have been lined up awaiting passage. So clearly he does think the U.S. is going to play a role here. He also had previously floated the idea that he was considering or looking at the notion of taking Iran's oil, similar to what we saw, of course, in Venezuela, where the administration continues to draw parallels, even though we have learned over the course of the last month and change that these are two very different scenarios and situations. But yes, it does seem that the president does have an interest, at least, in being more specifically involved here. That said, he has made the case repeatedly that economically the U.S. doesn't need the product that is coming out of the Strait of Hormuz, that we are insulated because of our own energy production, that really this should be a concern more for Asian countries and European countries, including those in the NATO alliance. And that's what the president is going to be focused on today, as he's meeting with the Secretary General of NATO, Mark Rutte, at the White House this afternoon. Probably going to be a very tough meeting when you consider the rhetoric we've heard from President Trump around the alliance over the course of this conflict. He has repeatedly said that he is disappointed that the allies did not come together to help out the U.S. in the Middle East. He even said that he said bye-bye to the alliance in a news conference just this past weekend. So that's going to be pretty telling what, if anything, emerges from that meeting.
It's going to be such an important day for Balance of Power, Kaylee. We're looking forward to watching that. Kaylee Lines, the co-host of Balance of Power, takes place 1 p.m. and then again at 5 p.m. Eastern. Again, essential viewing for today. Joining us now is Rachel Bronson, a non-resident senior fellow on energy and geopolitics at the Chicago Council on Global Affairs. Rachel, this from Tasnim, as Kaylee was mentioning, the semi-official Iranian news outlet, saying that they are thinking about exiting this ceasefire, this truce deal, if Israel continues to strike Lebanon. Israel had been clear when this truce was reached that they don't view Lebanon and the proxies as part of it. Is this a ceasefire that is falling apart before our eyes?
Well, I think what we're seeing is that a 2-week ceasefire is going to be very unstable, and that this isn't the end of the conflict. It's a pause in some of the significant fighting for the next 2 weeks as the U.S. and Iran in particular try to come to some sort of agreement. Right? We have a 15-point plan from the United States and a 10-point plan from the Iranians, and a lot of work to be done in between. The challenge for energy, and which you've been talking about in prices, is that you need to have some stability for tankers to move in and out. And so anything that threatens that will continue this crisis and keeping energy prices high in the world on tenterhooks, really, because it takes time to get tankers up and back. And they're not going to want to move if they think that the ceasefire is fragile. Now, you're seeing already the conversations between whether Israel counts or not. You're going to see that about a number of different issues coming. But this is a real challenge. It's a very, very fragile ceasefire. And I think the 2 weeks will be bumpy, and we should just hope that it stays as quiet as it is today.
Well, and is Israel kind of the weak link in the chain, Rachel? Because, the New York Times did a piece kind of illustrating that Netanyahu pulled us into this, even as all the advisors around President Trump were telling him not to do it. Could Israel now pull us out of this ceasefire?
Yeah, well, I think what you saw from that New York Times isn't that all his advisors were arguing against it. You had plenty of cabinet members who are willing to go along with the president, but Israel certainly wanted this, as they have for decades now. So there's nothing quite unusual about that. But I think what it is, yeah, Israel does have something to say, but so do the Gulf states. So what isn't being reported is that Gulf states, their defense systems were on alert and sounding last night as there was concern that they were again being targeted. So you've got the Saudis, the Gulfies, and the Israelis all playing a role in this. And you can imagine that the negotiations are going on right now about what's in and what's out of the 10-point versus the 15-point plan. And this is one where there's not agreement. And I think we're going to see many others coming.
Even as those negotiations are happening, Rachel, it still feels abundantly clear that it is Iran that controls the Strait of Hormuz. Far saying, the semi-official news outlet, that oil ships' passage via the Hormuz Strait have been halted after those Lebanese strikes, and yet it is an oil market that is still plunging, down 15% for WTI. Brent is down 13.5%. What do you make of that? Is it still hope that it will be reopened? Is it complacency? What explains for the headline versus the market move?
Yeah, well, I think there's relief that we're not in a civilizational attack that was being promised by this president that was so shocking and gobsmacking, the language that he was using, and a belief and a relief we've moved back off that cliff somewhat. What I do think we've seen, and this is why I think we're going to have these conversations for the next 2 weeks, is traditionally, as the Iranians have negotiated, they have taken the Americans really up to the date, the hour, the minute in terms of any sort of agreement. And now you have an administration, the Trump administration, that plays the same way. They take it right up to the last minute. And so I think already you can predict that if negotiations start as they're promised on Friday and they go for 2 weeks, that in 2 weeks' time, we're going to see as we get to some sort of, new deadline, that it's going to get very tense again. And I think we are going to see this up and down, but there is a relief that we've backed off of this cliff. Something from your prior segment, though, when you were talking about this joint venture from the United States, the United States position in the Middle East has always been about the free flow of oil. That has been for decades something that we've been advancing. So the fact that the Iranians, even if there is whatever this joint venture is, this is a radical change and it's costly. And the United States, as being the guardian of the liberal order, has always assured the free passage of the seas, of international waterways. That is now clearly something that's up for negotiation. So we will see a radical change of all these kind of things we've taken for granted moving forward from this moment.
Well, and that's part of the implicit petrodollar agreement, of course, and that's part of the reason that the dollar has become the world reserve currency. Rachel, great to have you on the program. I hope we can get you back on soon. Rachel Bronson there of the Chicago Council on Global Affairs. For more, by the way, in the latest developments on the Iran war, check out our blog on the Bloomberg terminal. Type TLIV GO. You can just watch NI Heads because half of them are about this. We continue to see, as Dani pointed out, a drop in the price of oil. All of the contracts pullbacks are falling still dramatically, and we continue to see strong gains in stocks in the U.S. and in Europe as well. So these headlines don't seem to be changing that much of the trade, but they're definitely something that you want to keep an eye on.
Yeah, I mean, it's coming a tiny bit. Instead of up 2.3%, we're up 2%. So a small impact, but again, as Rachel was saying, relief that it's not the end of civilization. On the other side of this break, we'll have another market check for you as we digest the headlines. You're watching Bloomberg Open Interest.
This is Bloomberg Open Interest. A quick check on stocks right now as we head to the top of the hour. We are still seeing, Dani, S&P 500 gaining 2%. Now, it had been up 2.5%.
Right.
NASDAQ up 2.5%. It had been up more than 3%. So we've seen these gains dissipate a bit.
Yeah, some of that dissipating just because of the fragile state of this ceasefire, with Iran saying that it might halt any agreement there if Lebanon keeps getting attacked, according to state media. And the Strait of Hormuz is now closed again, according to their state media.
Yeah, it does appear quite fragile. Nonetheless, we see oil still down 13%. That's for Brent. We see NYMEX crude still down 15%, $95.90. It had been $117 at its highest point yesterday.
Yeah, a huge come down in Delta, Carnival, all those travel stocks are still rallying. Catch me on Bloomberg Deals. Today at noon, I'm going to have an exclusive interview with Joe Baratta, Blackstone's global head of PE strategies. What changes now with the ceasefire in these markets? This has been Bloomberg Open Interest.